monthly PrimePay broker webinar series here, April 2nd, 2014. We want to welcome you here for taking the time out of your busy schedules to sit with us on one of our monthly webcasts. For many of you have joined us before, and we want to thank you for your business over the last many years and several months. And the information that we've been provided to you, we hope that it's driven some very practical application. For those of you who are new, our purpose of these webinars is truly to turn the technical guidance that we've heard so much about and confusion surrounding into that practical application. Ultimately, we want to make it easy for you to drive value-added solutions, strategies, and really equip you to grow your business. That is our goal. So good day to everyone. My name is Steve Jackson. I'm the Senior Vice President here in our HR and Benefit Services area here at PrimePay, and we want to welcome you to our monthly webinar entitled The Top 5 Myths of Implementing HRA Plans under ACA. What I'd like to do here before we get moving is just kind of lay a little bit of the ground rules for what I'd like to try to accomplish here today. We do have a lot of good content here to provide. I'm excited to share with you and go over these myths of implementing HRA plans, and I think we'll drive some good clarity here for you today. But how we typically run our webinars, everyone's phone lines are muted. We have quite a few number of individuals on today, so we want need to mute everyone's line. However, we do not want to suppress your questions. So what I'd ask you to do is, as we go through the content here today, if you would go ahead and use the GoToMeeting menu bar, the chat or the question box, and go ahead and type in your question throughout the webinar. What we will do is this. We get many questions about, hey, are you going to provide a recording, so on and so forth. What we will do then, we generally will not have time during the webinar to be able to answer all of your questions. So what we will do is we will, in a follow-up email to you, we will provide you a list of those questions with our answers. So we'll provide you with that list. We'll provide you with a copy of the slide deck presentation, and we also will send you a link of the recorded presentation as well. So we ultimately, will provide you with a lot of the information here that you can kind of at your leisure go back and review the presentation, whether the recorded version or certainly on your own with just the slide deck. So today's agenda, let's kind of dive into this here a little bit. The Affordable Care Act has provided a tremendous amount of new requirements. That's really a no-duh statement here. We all know that. One of the I guess central points of confusion of ACA has been surrounding HRAs, health reimbursement arrangements. And over the last many months, actually maybe over the last year or two, we have taken here at PrimePay a tremendous amount of questions surrounding how HRAs ultimately fit into the mix. There's a tremendous amount of just questions surrounding how an HRA can work given all the requirements of ACA. And so what we've done is taken basically the top 5 questions, the consistent questions really of confusion in regard to how HRAs can work given all of these ACA requirements. And we focused on 5 areas here for you today, 5 which we're calling 5 HRA myths, okay? Because what we hear out there is one thing, but what we want to do is drive clarity as to what the answer is. Okay, so the first thing is HRAs as it applies to individual medical policies. Instead of leaving the best for last, we are going right at it out of the gate. That's the #1 question in regard to how HRAs kind of coordinate or complement or work with, individual medical policies. So we are going to tackle that and drive some real clarity, I think, for you today. Also, HRAs versus metal plans, the bronze, the silver, the gold, absolutely, you're going to want to understand how HRAs can be utilized, coordinated with these specific metal plans that we now are, at least much more familiar with. Also, other employer-sponsored group health plans. How do HRAs, or can they at all coordinate with other types of plans? HRAs versus HSA-compatible plans. We're going to talk Actually, we're going to drive some real discussion there around how HRAs and HSAs, can they work together, can they coexist, and so forth. And then the last one here is focused on HRAs and retirees, which we will touch on. And then, for kicks, and actually a very solid myth that is also out there, we have an extra bonus, which we're going to leave till the end. So I know we're going to leave you hanging there a little bit here. All right. So we're going to go ahead and get started because as most of you who are aware of my webinars, I drive a lot of content, and so we've got a lot to talk about and much to cover. And so please feel free to go ahead and take notes as I go along. Type in your question in the question box in the GoToMeeting bar, and we'll either try to follow up during or certainly after the webinar here today. So the first myth, that's out there today is HRAs can be used to reimburse individual medical policies. Okay? So if we think about an HRA, if we think about, I guess, how an HRA, let me back up here just a second. As we think about an HRA under Section 105, Section 105 has been around a very long time. HRAs have been around for coming up on 12 years, at least in regard to how kind of health reimbursement arrangements were born, at least within legislation. HRAs have the capability, as we all know, we use them a lot with employers today, to reimburse deductible expenses, medical expenses, and so forth. But there was a date, and let me move now to the slide, before September 13th, 2013, we all operated probably pretty consistently, right? It's an HRA, it's 100% employer funded. An HRA would reimburse any eligible code, Internal Revenue Code Section 213D medical expenses. That's just the statute name for the unreimbursed medical expense, what is considered eligible. But also as part of the HRA, so pre-September 2013, individual medical policies were also an eligible reimbursement expense through an HRA. So prior to September of 2013, I think generally we all were moving in that same, vein, had utilized the HRAs in a very similar manner. September 13th, 2013, we had a joint release that came from the Department of Labor, Technical Release 2013-03, and IRS Notice 2013-54. And just digressing just for a moment, earlier in the year, HHS had come out with some additional kind of their thoughts or opinions in regard to how HRAs might be treated. At the end of the day. And there was still a lot of confusion when they made their announcement in January of 2013 just in regard to how HRAs can be used. Can they be used within exchanges, outside of exchanges? How can we actually utilize the HRA with our employers? Well, we had long-awaited guidance from the Department of Labor and the IRS on this specific issue. And as you guys Google those releases and that notice, you're going to find that they basically communicate these things in tandem. So a lot of the same information is provided in each of those notices. There was a key piece of information that had come out in that release and in the notice. And it surrounded itself around PHS Act 2711. And if you are familiar with that act, the basis for that act, and I've just put it in quotes, it basically states that you may not establish an annual limit on the dollar amount of benefits. So as you are aware, under ACA, there are no annual or lifetime limits on plans, right? So the plans that are established here today do not have that. Well, an HRA, folks, is a group health plan. And so HRAs have this issue. That, well, wait a minute, we mostly do put limits, right? An employer generally will always put a limit, generally, on an HRA to limit the reimbursement to a specific amount of the deductible or expenses or so forth. And so an HRA on its own may not establish any annual limit on the dollar amount of benefits. And so what that act in essence provided for or pushed forth in further guidance or clarified is it says, therefore, an HRA cannot be integrated with individual medical policies for the purposes of PHS Act 2711. So when you think about integration, a lot of the releases, so the Department of Labor and IRS notice release discuss that, okay, if an HRA, which may have a limit, as long as it is integrated with a group health plan, so an ACA-compliant group health plan, then that HRA, even though it has a limit, we're going to consider that integrated with the group health plan, and so it's permissible, okay? And so an HRA that is tied to a group health plan, which, folks, you know, generally what we see out there, that's what we're generally doing. But in the case where today, where employers might not offer insurance coverage, but might want to just offer dollars, kind of defined contribution amounts that would be for individual medical policies, and if they would like to do that through an HRA, what these releases and notice then stated is said, no, an HRA cannot be considered integrated with an individual medical policy for purposes of PHS Act 2711. Now, there was also a PHS Act 2713, which has to do about preventative services, and that also comes into the equation in allowing HRAs to be considered integrated. But PHS Act 2711 is the main crux of where, you know, where an HRA cannot be considered integrated if it's reimbursing individual medical policies. So the answer to this myth is HRAs cannot be used to reimburse individual medical policies. They cannot. So as we think about that, what I hope is going through your minds, though, is, well, there's got to be a solution, right? I mean, what is permissible? What are we able to do? I mean, what on earth can we do with an HRA? And so let me touch on that because, again, trying to bring this to a practical application, let's talk about what we can do here through that. So HRAs that are integrated with an ACA-compliant group health plan, as I discussed here prior, are absolutely eligible. And if you think about kind of a standard HRA that's out there that's reimbursing deductible expenses, it can reimburse any 213D unreimbursed medical expense. As you all are aware, the employer defines the expense that, or expenses that are going to be reimbursed through the HRA, so the employer still has that ability to do that. But generally, HRAs that are integrated, hey, you can reimburse any of those unreimbursed medical expenses based on plan design. Secondly, okay, so just take it a step further. So other than an integrated plan, if they're non-integrated, there's only a couple other ways that you can utilize an HRA, and that is, one, HRAs reimbursing accepted benefits. So it's the HIPAA accepted benefits. So accepted benefits would be like if it was a dental-only HRA. I mean, that could be a standalone HRA or a vision-only HRA, you know, as a complete standalone. Or it could also be individual premiums for these accepted benefits. So it could be dental, could be vision, could be, let's say, a hospital indemnity plan or cancer or maybe a limited medical type of a product, okay? So an HRA can reimburse these accepted benefits, but it's still not permitting an HRA to reimburse individual medical coverage, okay? So that would not be accepted. Next would be HRAs reimbursing expenses for retirees. Now, I'm going to touch on this in regard to one of our myths. So I'm going to go into greater detail there in regard to retirees. But when you think about what is permissible, HRAs certainly reimbursing expenses for retirees would fit the bill. Now, one other piece that I still say is somewhat questionable, there's a lot of gray areas around it, but is permissible, is the facilitation of after-tax payments of individual medical policies through payroll deductions. We get a lot of questions in regard to an employer that is going to not offer or no longer offer insurance, okay, for their employees, but they want to give them some money. And so we get a lot of questions surrounding, well, can I, as an employer, can I give them money? Can the employee then pre-tax those dollars through a Section 125 plan to pay for those individual medical policies? The answer is no, they cannot. So a facilitation of after-tax payments of individual medical policies through payroll deductions, yeah, I mean, you can do it. A note that I made, and you can search this specific DOL reg, is that you do want to ensure that ERISA's voluntary plan safe harbor is satisfied. And this is the safe harbor that's been around a long, long time, kind of covers 4 key areas. I just suggest that you could write that down, search for that, and pull that up, that information. And as you read through it, you go, okay, I mean, I would say for the most part, employers could meet that definition, but it is something that you would want to consider as you're having that consultation with the client about facilitating after-tax payments through payroll deductions for those individual medical policies. So as we look at myth number 1, this question, these comments of HRAs can be used to reimburse individual medical policies. Well, our answer is, myth is debunked. You cannot reimburse individual medical policies through an HRA, at least as an accepted benefit. We're going to talk here a little bit about retirees to kind of drill that a little bit further. So myth number 2. I mean, that's a heavy one there in myth number 1. Let's get to myth number 2, because coming in a close second is this specific statement here that comes into us. Hey, you can't use an HRA with any metal plan, okay? So you all are familiar with the metal plans as we have them here today. As you think about the theories or the main theories around, well, what do you mean, Steve? So an HRA with any metal plan. So some main theories of this question come from these 2 areas. So one is the amounts in an HRA could move a plan from a bronze level or from one level to another, to a silver level. And so what some either carriers or, maybe an employer would state saying, well, look, maybe I'm doing providing a self-funded plan, maybe. I'm wanting to provide a bronze level plan, but because of my HRA contributions, funding, that pushes that to a silver or to a gold or platinum or what have you. And so there's been a lot of conversation in regard to, well, listen, you can't use an HRA because it's going to bump it from that bronze to a silver or, from whatever level that you may be trying to attain, okay? But secondarily, or the deductible is at the maximums of $2,000, $4,000, right? So we got a lot of questions here over the last many months in regard to, well, hey, our state, the small group market is at a maximum of $2,000, $4,000. How do we even put an HRA in here? We can't go higher than $2,000, $4,000 or whatever that state maximum might be. So how on earth do we use an HRA? You know what? You can't use an HRA. I mean, that's what we typically hear. But let's look at the real answer, all right? Let's debunk that myth. The answer is you can use an HRA with a metal plan. And you can actually utilize the HRA, the amounts for the HRA or the funding for the HRA to determine either the affordability, okay, of, say the employee's affordability of that benefit, or apply it to minimum value. So you actually have a choice. But let me remove one of the obstacles in everybody's way, and that's centered around the deductible limits. If they're at $2,000 and $4,000, we can't set up an HRA to reimburse anything certainly above or beyond that, okay? Well, just yesterday, the President signed a bill. It's called Protecting Access to Medicare Act of 2014. And if you all are familiar with this particular bill, it was to amend the Social Security Act to extend Medicare payments to physicians, okay? So, which has been talked about for every year as far as I know, as long as I can remember. And they've extended that here again. Now, Section 213 of HR 4302 actually provided this: the elimination of the limitation on deductibles for employer-sponsored health plans. So what they've done by the signing of this bill is that they've eliminated this maximum of the 2.4 no longer. Okay, so that limit has now been removed, which would enable an employer, a carrier employer, to choose the plans, whether it's a 3-6, 25-5, whatever type of deductible that's needed. The employer now can really choose and have more flexibility in the choices that they may have. So that is great news, folks, and that just came out as of yesterday as far as the President signing that. Secondly, amounts newly made available under an HRA, so dollars that are now going to be used through the HRA, the employer can either use the HRA amounts either for premiums, so that's the affordability aspect, or cost sharing. Okay, so cost sharing would be the minimum value aspect of it, and you may not double account the HRA amounts. Okay, so what they're saying there is, listen, you can use it toward the affordability, use it towards the minimum value, but you can't use it for both. Okay, can't do that. All right, so that makes a lot of sense. So what we see here now is that an employer has the flexibility with this, with the President signing this Medicare Act of 2014 and the elimination of the limits on deductibles. That's going to allow greater flexibility for employers to utilize HRAs. But one thing to note in what we've seen and instructions that we provide, the employer will want to, I would think, apply the HRA towards the affordability, and that certainly is allowable. Whether it's small group or large group, that can be done. So that is actually very, very good news to have. So as we look at this myth, you can't use an HRA with any metal plan. Oh, myth debunked. You can use an HRA with any metal plan that's out there today. All right, we're knocking them down here. So the third myth here today, an HRA cannot reimburse medical expenses from another employer-sponsored group health plan. So I think many of you right now might be going, wait a minute, Steve. Okay, listen, all right. HRAs, an employer adopts an HRA for their group health plan, let me see here. They usually are going to cover expenses that are incurred through that employer plan, right? Okay, so as we look at that first bullet, an HRA sponsor, they're going to use HRAs to reimburse their employees, okay, for eligible incurred expenses, incurred by their own group health plan. So to set this up, and why this question becomes or starts to become more important is that, as you may be aware with ACA, an employer, at least a large employer, is obligated to offer insurance to their full-time employees, right? And they need to offer insurance for their employees and dependents. They have, and actually I've been told that this was, they missed it. They didn't add spouse for whatever reason, but spouse was excluded from that conversation. And so employers, I don't know, small, large, might consider removing the spouse as coverage from certain plans. And so employers are looking to more broadly manage their benefit offerings, kind of drive a wider net in regard to benefit offerings, and an HRA just might be used for that. And so with the additional guidance back in September of last year through the DOL and the IRS, they also discussed that HRAs can reimburse medical expenses if considered integrated with other non-HRA group health plan coverage. Okay? So let me, before I go into these last two bullets, let me just touch on, or maybe touch on an example. So you have, let's say, so I am an employee of employer A, and employer A offers health benefits. They provide an HRA. My spouse works at employer B, and employer B does not offer an HRA, but offers a group health plan. So employer A stipulates in the HRA that, hey, if you waive coverage and go on your spouse's plan, as long as you have an ACA-compliant plan, group health plan coverage, I will reimburse you for these set expenses, deductible expenses, whatever it may be, okay? And so that's what we're talking about here in regard to how an HRA can reimburse medical expenses even though they're expenses coming from another non-HRA group health plan coverage. So in the 2 bullet points here, the HRA is available only to employees who enroll in other ACA-compliant group health plan coverage. So if I switch over to employer B's, my spouse's plan, it does need to be an ACA-compliant, group health plan. Okay, so I'd need to prove that. But that HRA then can reimburse copays, coinsurance, deductibles, and certainly premiums for accepted benefits, if that was allowed by an employer. Probably not, but certainly could be allowed. So an HRA, through the Department of Labor and IRS guidance then, September 13th of last year, they also brought forth this notion, this idea, this solution that is now available where an HRA can reimburse medical expenses even if it's not really part of the employer's group health plan or incurred through that specific group health plan. So again, as you're talking with your clients, these are just some ideas. You might be having conversations where employers are just saying, they're going to no longer cover the spouse for the employee, or maybe their coverage is just it's just not as rich. And so they have employees that might want to go or give them the option to go to another or to their spouse's plan. So clearly could be a solution, here for your employers. So myth number 3, an HRA cannot reimburse medical expenses from another employer-sponsored group health plan. Myth debunked, all right? An HRA can reimburse those medical expenses. All right, myth number 4. This is a good one. An HRA and an HSA-compatible group health plan cannot coexist. All right, so let me give you some statistics here, and just in regard to, if you just take healthcare.gov, the plans within healthcare.gov, approximately 40% of the plans that are offered within healthcare.gov are considered HSA-compatible plans. I do not have a statistic for you because it does vary with carriers in regard to those plans outside of the healthcare.gov, but I would surmise that more employers here over time are going to be offering more HSA-compatible group health plans. Well, these employers that start to make these decisions and include more of these plans, well, guess what? Many of these employers have an HRA in place. They might have an FSA in place. Today we're talking about HRAs. So they might have an HRA in place. Well, you need to understand, well, one, can they coexist at all? But if they can, what does it need to look like? So let's kind of dive into that here a little bit. I mean, I'm a big fan of HSAs. I think that they make a lot of sense for a lot of us. It helps us become better consumers, certainly, in how we purchase our health care. So, it's a wonderful account, and certainly would recommend it where appropriate. But let's look at the basics here, because the basics of an HSA, if you have an employer that is now going to adopt an HSA, right, and if the employee wants to make contributions or the employer wants to make contributions, there needs to be a good understanding of who is eligible to receive those contributions. So back when HSAs kind of became law here about, maybe 9 years or so ago, the restrictions came in regard to your ability to contribute to a health savings account. And so the basics here, I just wanted to kind of cover the basics with you today. That eligibility would require an individual to, 1, enroll in a high deductible health plan coverage, so HDHP, so you have to enroll in a plan that is considered HSA compatible or HSA eligible, all right? And then secondarily, that there are no other disqualifying types of health coverage. And I threw in a couple examples there, one being Medicare, clearly. Okay, that would disqualify someone from contributing to an HSA if they're enrolled in Medicare. But also, just to put a blank kind of phrase in here, first dollar benefit coverage. So any dollar amount that was paying for expenses, so if you were covered by another plan, which could even be an FSA or an HRA that is providing first dollar benefit coverage through that first portion of the deductible, then that also would disqualify an individual from contributing to their HSA. So a lot of questions as we sit here in this last bullet point. It says an eligible individual can make or receive contributions to their HSA. So as long as they remain eligible, they can do that. They can make their own contributions. They could receive contributions from their employer. But if they have other disqualifying health coverage or first dollar benefit coverage, that makes them ineligible. And another strong question that comes up oftentimes is, well, I know that the individual cannot make a contribution, but can they receive the employer's contribution? The answer is no. If they're ineligible, then they're ineligible to make a contribution themselves or receive a contribution direct from their employer. So we have an issue here between an HRA and an HSA-compatible group, and we want to know, can they coexist? Well, the answer is an HRA can coexist with an HSA-compatible plan as long as the HRA does not reimburse expenses before the minimum deductible has been satisfied. Now, the 2014 limits are $1,250 for single, $2,500 for family. So as long as the HRA is not coming in or not reimbursing any expenses on that deductible until $1,251 and after, or $2,501 and after, an HRA can coexist with an HSA-compatible plan. So let me just show you a quick example. I think that this will just kind of bring it to light. I love this plan design because it actually pushes forth consumerism for the employee. It gets the employee kind of in the game, certainly skin in the game, because they have some first dollar that they need to spend. But then the HRA is still there that if they really were to hit it hard medically as a family or financially as a family that year, then the HRA is there to actually help them for catastrophic, types of coverage losses that, that they experienced. So in my example here, we have an HSA plan that has a $3,000 single, $6,000 family deductible, okay? So the HRA comes in and reimburses the last 50%. So the last $1,500 of the single deductible, the last $3,000 of the family deductible. Okay, so the employee is responsible for the first $1,500 and the first $3,000 based on their level of coverage. So here's what the employee can do. The employee can open an HSA, okay, because they are enrolled in an HSA-compatible plan. They can contribute the full contribution limit allowed, okay? And in 2014, it's $3,300 for single, $6,550 for family. So even though they would only be responsible for the first $1,500 or $3,000, they can actually put in the full contribution limit amount into their HSA and still receive the full HRA benefit. So once they hit 1,501, or 3001 and thereafter, they're now going to receive the full benefit of reimbursement for the HRA. This type of an HRA is called a post-deductible HRA. And again, as long as the HRA is put in once the minimum deductible has been satisfied, so that's $1,250, $2,500, okay, actually is the number. That's the minimum deductible. But anything over that, as long as the HRA would come in after that or over those amounts, it absolutely can coexist with an HSA plan. And I will dare say this is a fantastic solution for many employers that are now adopting HSA-compatible group health plans, and combining an HRA and an HSA makes a lot of sense for both employers and employees. So An HRA and an HSA-compatible group health plan cannot coexist. Myth debunked. An HRA absolutely can coexist. There are some ground rules, but they absolutely can coexist together. Myth number 5. All right, employers cannot adopt an HRA for their retirees. So, what we are seeing here from several employers, you can't certainly sit here and say that it's just kind of flying off the shelves, right? But employers are thinking about these types of benefits for their employees, or at least for their retirees. You might see a lot more of these adopted in larger employers, union, and so on and so forth, municipalities, things of that nature. But I will say that we're getting a lot of questions in regard to retiree types of benefits, really much more than we ever have here in the past. So employers cannot adopt an HRA for their retirees. Let's kind of dig into this here a little bit. For simplicity here in regard to this specific myth, there are 2 types of HRAs, okay, if I can kind of define it in this way, under ACA for you. There are accepted, so HIPAA accepted benefit types of HRAs, and those are the ones that we've discussed, certainly an integrated HRA, so those HRAs integrated with a group health plan, standalone, dental, vision, hospital indemnity, cancer, those type of premiums are considered accepted benefits. Non-accepted benefits are those that are non-integrated HRAs. Okay, so in essence, what the guidance provided in September of last year was basically, well, virtually any non-integrated HRA, but for some of these accepted benefits, are going to be considered non-accepted. Okay, so you have a non-integrated HRA would be non-accepted or prohibited, and then premiums specifically for individual medical policies. Okay, however, there is an accepted benefit here, and I did mention it before, and so we'll dive into it here. So the answer to this myth is employers can indeed adopt an HRA for their retirees because it is considered an accepted benefit. So when you think about an employer who would like to provide a retiree benefit, to some degree what they're doing is they're providing them a monthly amount through an HRA, and those dollars, let's say historically would have been used for any medical expenses, but also used for individual medical policies, right? To give them some dollars to be able to go spend, and enroll in an individual medical or in an individual medical coverage. So, but ACA now kind of caused, confusion there in regard to, well, can an HRA still provide a retiree this benefit? So a couple things just to consider, okay, and these are good things and just things to note as you talk to your clients about this specific type of a solution. Since it is considered an accepted benefit, a retiree that is given money, given funds, an amount through the HRA, they may use those dollars to purchase individual medical coverage. So here, in the first myth, I said we debunked it. You cannot reimburse individual medical coverage premiums through an HRA. However, one little outlier or caveat is that it can be used to purchase individual medical coverage in a retiree-only HRA. There's a couple things then to further consider. One here, the retiree must be given an opt-out of the HRA, and I'll explain that here in just a second. The last one is retiree HRA benefit is considered, so that amount is considered to have provided minimum value coverage and therefore would disallow a premium subsidy. So think about these retirees. I mean, if they no longer have coverage through their employer, but they're now given dollars from their employer, just like probably you and I, we'd go to healthcare.gov or whomever we may know, but let's say healthcare.gov. Let's look around. Let's see what I can get. Do I qualify for a subsidy based on my household income, and so on and so forth? Well, what they might find is that they do qualify for a premium subsidy. Well, Since the HRA benefit to that retiree is considered to have been providing minimum value coverage, minimum essential benefits, it would actually disallow them of that subsidy. So, in the prior bullet, the retiree must be given an opt-out of the HRA. So each year, that retiree must be able to say, thanks, but no thanks, I'm waiving this benefit. Why? Because I'm able to enroll in a benefit or into a plan through healthcare.gov, and I'm receiving a subsidy, and just financially the numbers work where I'm getting a better subsidy amount versus what I'm getting from my employer. Okay? So consider those things there, before implementation, as you have conversations with the employer. Employers might already have a specific retiree benefit program and might consider an HRA as the best way for them to drive the amounts or the funds so that it's given tax-free to the retiree, but also tax-deductible, to the employer. But you also may be talking to more employers today that are actually wanting to move in this direction for whatever reason there might be, okay, to do that. So, myth number 5, employers cannot adopt an HRA for their retirees. Myth debunked. Employers can adopt an HRA, certainly for their retirees. All right, we have come now to our bonus myth. And this is also, as we look at confusion kind of in the field, as we talk to a lot of benefit professionals in regard to this specific question, many benefit professionals out there, for one reason or another, has determined that ACA has really just limited how an HRA can be used. And I think a lot of that might be a specific maybe it's a third-party administrator or administrator of a carrier, what have you, that might put an HRA in a box or in a certain way. But we hear this question or this statement a lot. Well, hey, you know what? HRAs we can only really focus on some simple plan designs, and that's about it. So one of the things that we see then from our brokers and our partners is, the general consensus today is, well, an HRA can be used to reimburse deductibles only. Okay, most employers today, I would say most plans that are adopted today are reimbursing, the deductibles of that plan. So the general consensus is, well, HRA, they can kind of keep doing that. It's pretty easy, pretty simple. Some tell us, well, designs are limited. We can only do so much, or it only applies to large group business only, so more of the 50-plus market. Or, we hear that it has to remain a pretty simple plan design because an HRA cannot reimburse more than the small group maximums of $2,000, $4,000, or just, because the deductible limits had been suppressed. The reimbursement, it's not going to work, or you just can't do any more than that. Well, we certainly provided information today that due to the President's signature, that limitation has now been removed. So that's fantastic news. And then lastly is the use of a debit card, or at least technology to allow for greater flexibility of that employee to utilize those funds. We run across a lot of brokers and employers that want to get really creative with HRAs, and just the feeling of using debit cards or using different types of technology, a lot of folks just say, well, maybe the HRA debit card is prohibited, at the end of the day. And so we really have to stick to simple plan designs because there's just really no other option, that we may have. So the answer to this bonus myth is that the ACA has clearly not limited the HRA to only simple plan designs. And so I wanted to at least kind of show you an example that, we still have brokers, benefit professionals, employers really thinking about how an HRA can complement their overall benefit offering. And one thing that I just want to, the statement that I want to get out to you guys, since we hear the confusion out there, is that HRAs today are still as flexible in design as they ever were, even though we're under ACA today. That there is still great flexibility in regard to an HRA. I wanted to show one example that I thought would at least reflect how people are thinking outside of the box in regard to I think a simple way to provide an HRA to an employee, but it has a little more complex design nature to it. So let's look here at this example. The employer is going to offer an HDHP plan, okay, so a high deductible health plan. It is an HSA-compatible plan, and it has a deductible of $5,000, $10,000, okay? So as you know, with an HSA-compatible plan, the prescription, the RX, would be included as part of that deductible, okay? So what this employer did was that they established a structure that the HRA, or the employer, will reimburse 67% of all deductible expenses incurred. So from $1, the employer says, I'm going to cover 67 cents. You're going to be responsible for 33 cents as an employee. So I think, and so the maximums there are $3,350 and $6,700 as far as what the employer would be reimbursing. Now some of you might go, oh my goodness gracious, my employees are going to have to get a calculator out and figure out, okay, 2/3 of this and da-da-da-da-da. No, they're not. So what an HRA is able to do is that HRA will reimburse that 67% of all deductible expenses incurred. So let's kind of look at what will occur. So the employee is generally, as they go to their doctor's office, or they have labs done, or they have certain other medical expenses that apply toward the deductible, they're going to receive an EOB, electronically or in the mail, what have you, and they're going to be able to submit that EOB either online or mobile claim submission of those EOBs, and accordingly the HRA will reimburse them back 67% of that amount, and the employee will be ultimately responsible for the third, that 33% of that expense. Pretty easy. When you submit that claim, they don't have to do the calculation. We automatically do it for you, right? But the second one is the real critical piece that I thought, wow, this is fantastic, provides real technology, real solutions to the employee. Well, one of the biggest issues, at least for the employer, was the RX piece. Here we had a $5,000, $10,000 deductible. The employer knew that if the employee goes to the pharmacy and they fill a prescription, that bill could be $100, $50, $10. It could be $2,000, right? Depending on the prescription that they were filling. So what the employer wanted was a debit card that could be used for RX only, so cover those expenses at the time of the transaction, but yet they wanted the debit card to only pay 67% because that's what the HRA was established. So debit card technology today permits it. So when that employee goes to the pharmacy, and let's say they have a $100 prescription that they are filling, $67 when they swipe their HRA debit card, $67 will come directly out of the HRA. Now going a bit further, let's say that employee did have an FSA on this particular plan. Then the card actually would pull the remaining 30% in that swipe directly out of their FSA. So in one fell swoop, in one swipe, $67 goes paid for by the employer through the HRA, $33 is paid for directly out of their FSA, grab the receipt, prescription, and go, right? So they could either pay that out of their FSA, they could pay it out of their own account. If you look at this example, as we talked earlier about an HRA and an HSA coexisting, with this particular plan design, the HRA and HSA cannot coexist. Do you know why? Right, because the HRA is paying first dollar. So it's a first dollar benefit. They're not waiting until the $1,250 or $2,500 has been realized. They're paying as of $1, even though it's 67% of $1. It still would be considered first dollar coverage. So what I want to at least stress, at least out of this particular example, is that you absolutely can think more outside the box. Technology is getting better and better to drive a little more complex types of designs, but at the end of the day, making them simple for the employee. So this is just a reminder, that HRAs complement almost all employer-sponsored group health plans, and that these myths, as these statements have been made, as these myths have been created, at the end of the day, ACA, have they limited the HRA to only simple plan designs? Myth debunked. So just like the other 5, this one also is debunked as well. So let's just touch on just a quick review of these key myths and just touch on some key points. So a quick review. So again, HRAs cannot be used to reimburse individual medical coverage. For all of you that might send me a note afterwards that say, no, but they're saying, but wait, they're saying, I'm going to tell you today from the top attorneys in the land that number 1 right there is just less and less and less debatable. So HRAs cannot be used to reimburse individual medical coverage. Now, we mentioned a retiree HRA plan can, because it is considered an accepted benefit. Number 2, an HRA can be used with any metal plan, so no longer do we need to worry about an HRA or whatever the deductible amounts are. You know, can I use an HRA for small group, large group? You know, the answer is yes. Number 3, an HRA can reimburse medical expenses from another employer-sponsored group health plan, so certainly might be a solution for some, but it's certainly nice to know that it can be done. Number 4, an HRA and HSA-compatible group health plan can coexist. Absolutely. Just know the rules, but an HRA and HSA can absolutely coexist. And actually, in the example that I gave you earlier, that's a wonderful solution for employers and employees alike, post-deductible HRA with an HSA. Number 5, as I had mentioned, employers can adopt a retiree HRA plan. And myth number 6, ACA has not limited the HRA to only simple plan designs. So let's look at just a couple key points for HRAs, and these are kind of some no-duh types of statements, but good to reiterate. Keep in mind, this hasn't changed. HRAs are only 100% employer funded. And the reason that I still write that today is that I still hear from you all from time to time asking me, well, hey, what if my employee's salary deduct money, the employer takes it, then the employer provides an HRA? No. Can't do it. It's got to be 100% funded by the employer. So keep that in mind. Tax-free, certainly to the employee. That's what makes an HRA a great benefit. Certainly tax deductible for the employer. A great benefit to the employer is this promise to pay, right? Employer reimburses what is utilized or incurred, but they're not necessarily, going to pay everything. So it's a promise to pay, and they'll pay it when they incur it. Second to last, flexibility in design. Clearly, if anything that you can remember out of this is that there's a lot of flexibility in how you design your HRA. And then lastly, continue to think about how an HRA can complement a more comprehensive benefit offering. A lot of your employers may have HRAs already. If it hasn't been looked at for a little while, you might want to consider it, because you know what? That employer, if they haven't adopted an HSA-compatible plan yet, I don't know, next renewal, they probably will, or at least come close to it. So you need to start having those conversations in how an HRA might complement that at the end of the day. There have been some fantastic questions here. I've looked at, tried to look at a few of these here as I've gone along, but not really having the time to kind of go through and answer a lot of those here today. What we will do is this. I will accumulate all the questions, look for an email from us here in a couple days, and we will provide kind of an FAQ. We'll list all the questions and our answers to that. I think with the responses that we get from folks, that is really helpful. And that way everybody can see the questions that are being asked. I think it can be really helpful in how you're talking with your clients. So we will provide the questions. We will provide a recording of the webinar here today for your viewing there as you need it. Also a copy of the slide deck so you will have it. So I can't thank you enough for attending today's webinar. I hope that as we've debunked these 6 myths that this statement here is true, that implementing an HRA plan for your clients, even though we're under all of these crazy ACA requirements, that it actually is pretty easy. And we hope to make it easy for you. Please feel free to send us any questions or comments as I send out the follow-up email to you here in a day or so. Otherwise, have a great day. That will conclude our webinar for today. Have a good one.